हाय फ्रेंड्स, दिस इज CA हर्षित अग्रवाल। होप आप सब अच्छे होंगे, मैं भी अच्छा हूँ। सो टुडे वी विल डिस्कस अ टॉपिक, हाउ टू डू प्रैक्टिकली ऑडिट ऑफ इन्वेंटरीज. सो इन्वेंटरीज प्ले अ वेरी मच important role while auditing in any organization. This plays a very crucial aspect. This is a very crucial financial statement line item on which our emphasis and attention should divert. So we will straight away go into the topic auditing of inventory. First of all, the governing Ind AS pertaining to inventory is Ind AS 2. Yes, Indian Accounting Standards Ind AS 2 is governing Ind AS. So what is inventory? Inventories are basically assets which are in business for the purpose of sale in the ordinary course of activities of the organization. Management or the organization is purchasing or is having the inventory for the purpose of sale in the ordinary course of business for the daily activities. It might be of finished goods, it can be of work in progress, it can be of raw material as well. We will physically verify the closing stock of company so as to ensure that whether there is any over or understatement of values made by the company or not, because we always know that valuation of inventory is a very important aspect, and that determines the profit or loss of the organization as well. Whether closing stock is adjust whether closing stock valuation is done properly or not, so we have to take into consideration very well. And physically verifying inventory, that we can do so by through techniques. There are two methodologies basically which are very prevalent in any organization. First is floor to sheet, second is sheet to floor. So first of all, we will understand what is sheet to floor. Basically what we see in sheet to floor, that management prepares particularly one sheet, you can say, and they are specifying inventories, their tagging location, which sort of inventory is located where, and quantity, what is a quantity wise of inventory, date of purchase, and etc. Description of that. Then we will pick samples of that inventory, and then we will try to physically verify of those samples of inventory on the actual floor to verify their existence. Basically we have to understand that whatever the inventory which the management is reporting in their document and the sheet which they are presenting, whether the actual existence of inventory is there on the floor or not. So that particularly symbolizes the sheet to floor technique. And another technique which we follow is floor to sheet. The reverse happens here. If we go to the inventory warehouse or floor, we will see any stock. Hypothetically we will pick one stock or two stock, or depending on our samples and our methodologies. Then we will ask from the management that that physically stock is in inventory warehouse we are having this particular stock. So just let us know that where in that particular sheet which is presented to us by you, where can we find that particular sheet in, and in which department. So we will just verify the we will cross verify in the second methodology as well. So that particularly pertains to floor to sheet. First is sheet to floor, second is floor to sheet. And major existence to check in the audit of inventories, basically we were checking two things: existence and valuation of inventory. Existence we have covered, whether the inventory which is reflecting in the balance sheet actually exists in reality or not. Whatever draft financials or trial balance which has been presented to us by the management and it is showing a particular figure of inventory, it we have to verify that whether it's particularly existing or not, or whether it's just a window dressing type of thing. So it's very important. Then we have to see the valuation, whether they are valued properly or not. There are many techniques: weighted average method, first in first out, last in first out, sorry. So there are many various methodologies by which management values the inventory. So we have to just verify the methodologies of that also, whether the valuation has been done according to the market values or not, whether it's not being happening that a particular, for example, if the management is having the uh, valuation of particular, we say laptop. If you take one unit, the organization is valuing that inventory at 1 lakh, but in the market the net realizable value, when we survey or when we research or when we see that